All right. So let's say you now have your indicators and you want to trade. So we're going to start with the first two indicators, which is the auto fib retracement and the stochastic RSI. We need to understand those two, concentrate on them first. Then later you can add the third one, which is twin range filter. Twin range filter is pretty easy, but let's just start with Doge. All right. So I've gone to my watch list and I'm clicking on Doge. Now I want to click on Doge. I just want to click on full chart. When I click on full chart, most of the times I take my trade based on the 1 hour chart. So if you want to change that, just tap here. And of course, personally for me, I decided to click on the star here, make the 1 hour chart my favorite, make the 4 hour chart my favorite. Okay, so you can just tap on the 1 hour chart here or switch to any other chart of choice. Okay, so you tap and switch. If the 4 hour chart, you tap and switch, and you can see it's changed to 4 hours now. You go back to 1 hour chart, tap and switch. All right, pretty easy. Another thing I do is sometimes when indicators are all over here, just tap on this arrow here to hide those indicators. All right, because you need to see your page a little bit clearly. Remember, there is no indicator that will give you 100% trade success. All right, but the beautiful thing is the margin calls of RoyalQ keeps you in the game. The margin call settings of RoyalQ keeps you in the game. That is why we dedicated the first two videos to the margin call settings. So let's talk about how to trade. This video, we're going to tell you how to trade in the uptrend. Now, how do we mean uptrend? Well, the Fibonacci, the auto fib retracement indicator will tell you whether it's up or down. How do you know it's up? You see all these numbers by the right side. If you observe that 100 is down and 0 is up, you follow 0. Wherever 0 is the direction of the market. All right. So 0 here is up and 100 is down, which means the market is going up. It's an uptrend. So in an uptrend, the market will go up, come down a little bit, touch down, and then still head up. All right. So you can see the retracement has happened and it's going to still head up. So how do you trade in an uptrend? That is what this particular video is dedicated to. Right, it's easy. Remember, if you want to see your indicators clearly and the lines, you can click here, just tap here and drag your hand down or up, depending on whatever you want to achieve. All right. So in case you're not seeing 100, you can just narrow it down and you can see your 100 clearly. And you have your 0 here. All right. Then after that, you've determined it's an uptrend. You can now expand it by clicking and dragging your hand up. Okay. Now, the important levels when it comes to the auto fib retracement to the following levels, please do pay close attention to these levels because you're going to be trading with them, you're going to be analyzing the charts with them, and you're going to be taking decisions based on them. So the levels that are key interest to you are the 38.2, 50%, and 61.8. Okay, so you can see the 38.2 here. This is the 50%, this is 38.2, and this is the 61.8. So there are very likely levels that the market will touch before firing up. Now, we said it's an uptrend, right? Because 0 is up here. All right. Now, the rule is the moment the line touches 0, the moment the market price touches 0, and expect the market to start going down to retrace. Now, when it retraces, sometimes the market will touch 38.2, go up. Sometimes it will touch here, go up. Sometimes it will touch here, go up. Now, we always encourage people to wait for it to touch 61.8. In an uptrend, wait for it to touch 61.8 because that means there has been enough pullback. Once you've had enough pullback, it means you will likely quickly hit your result. Okay, so if I am looking at this trade right now, this Doge, I can tell people, hey, Doge has touched 61.8, is good enough to gain entry. Remember, the first thing is that's touched zero and it has pulled back. Once it pulls back, wait for it to pull back to 68, possibly. Wait for 68%. Sometimes you can decide to do 50, but when you wait for 68, 61.8, it has pulled back enough. All right, then you can enter the trade. Now, I tell you, this trade, you can actually enter it right now. The reason is simple. It has pulled back enough to 61.8. I can give a signal right now and say, go enter this trade. All right. And I could wait for the candle to close at the top of the hour and we'll see what the market closes its position. Now, that is the first thing you look out for. The second thing you look out for is the direction of the stochastic RSI. Okay. Now, the rule is let the stochastic RSI be below here and be trying to point up. Okay. So if you see the stochastic on this green line or hovering around here, trying to point up, and this price has hit 61.8, that is a good sign of buy. All right. And I'm looking at this from the 1 hour chart. So that's a good sign of buy. But then before you take your position to buy, you might decide to inspire yourself with more confidence. How can you inspire yourself with more confidence? By going to the higher time frame, which is the 4 hour chart. So when you click on here, you switch to the 4 hour chart, you tap on 4 hour. You just need to look up what's happening here. You have two things you need to look out for. One, is the market controlled? What color is controlling the market? All right. What color is controlling the market? So you can see the market itself has also retraced here. It's showing red, which means the reds are controlling the market right now. So you might decide to say, oh, let me leave this market for now. But here's another thing you need to observe. The color of the candle and the position of the stochastic. Now, the position of the stochastic is up here, which means that there's a possibility, it's all possibility, probability. There is no certainty. It means there's a possibility that it will dip. It will dip a little bit more. Let's just scroll back here so you can see what has happened. So here the market went up and then it dipped a little bit more and, hovered on the bottom before it now came up. So right now we're up here again. It's likely it's going to dip for a couple of more candles. All right. Now, here's what I'm seeing with this candlestick. It looks like the bears and the bulls are battling, the buyers and the sellers, because the sellers dumped and the price came here and the buyers are buying with some level of bullish momentum. So you can monitor when this 4 hour candle closes and see what the next 4 hour candle will be. All right. That's what's going to determine whether you enter the trade or not. Remember, the 4 hour chart is just to see the higher level time frame. If you come to the 4 hour chart and you find out that the stochastic is at the bottom here, trying to push upwards, that's a good sign. It means that this trade is likely going to hit its target. Now, if at that same time the candles are green, that means, oh my God, this is a very good, trading setup, and it will likely be a success. All right. So, for example, if I've come here, even though the market is showing that it's on the high side, I'm about to come down, and I'm seeing that the candles are blue, and it's just one candle. The first candle that is green, bullish. I could just enter the trade on the 1 hour because I'm seeing the green color candle, which means the bulls are in control, and I could just take that as my indication. All right. But if you come to the 4 hour chart and you see the candle is green and the price is right here at the bottom, oh my God, then that's a good sign. So, for example, when the price was right here, even though they were all red, it's a good sign to go in, because check out what happened from there. The market really pumped and went high as the stochastic price went up. So this is just an idea. You have to take your own decisions. But remember, looking at the 4 hour chart, the 4 hour time frame, is just to give you confidence to know what's happening at the bigger time frame. Because when you come here and you see that the stochastic is pointing here and the candles are becoming green, it means that there will be massive momentum on the 4 hour chart, very likely, and that will give you much more confidence for your trade. on the 1 hour charts. Okay, so I just click here, go back to the 1 hour chart, and I can decide to place my trade, having seen that the market is a little reddish. So we saw that the market was a little reddish. That means bearish, and so we decided to wait a little bit. We might just tell ourselves, okay, let's wait a little bit. I know that this thing has pulled back and has touched the 61.8 mark, but let's wait a little bit. Here's another thing you need to know. Most times, the candles will color greenish for up to 7 to 10 candles before they turn reddish. So here is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. All right, before the indecisive candles came up. So this is indecisive, indecisive, indecisive candles, right? There was really no direction here. So that's telling you that the bullish momentum is getting saturated. So I need you to understand that the fact that you're seeing red here, it means that there could be 7 to 10 red candles coming up. All right, so you don't want to be in a hurry to quickly. Yeah, because of RoyalQ's margin configuration, you can just jump in here. It doesn't matter. I mean, if the market goes against you, it's going to just buy the dip. All right. There's no need of over-analyzing. So right now, once the candle closes and the next candle opens, I can just say, hey, come on, go into this trade because it has touched the 61% mark. That is what you do to take a decision when the market is in an uptrend. All right. So that's it for an uptrend. Now, here's what you need to know. Another thing, how to set your profit targets. So let's say you decided to enter this trade here, and now the price is currently here. When you get a signal, always come to the chart here because the price for the signal is always in the signal. Come to the chart here. So you look at the price, 0.08215. So if the signal was given at 0.08216 and the price is 0.08215, you can still go in. But if the signal was given at the price 0.08215 and you come in and the market is on 0.08350 here, of course, you know the market has moved. You just leave that signal. All right. So whenever you get a signal, if you come in several hours later, you want to know if the signal is good, just check the price. Has the price gone lower than the price at which the signal was given? If the price has gone lower, that means it's buying the dip. So please feel free to enter into the signal and trade. Okay, that's very important. So let's go into setting your profit targets and the percentage dip that you're going to tolerate. How do you achieve that? You click on this 3 dots here. Okay, so not that, sorry. You click on this sign. Okay, when you click on that sign, you get to see different trend indicators. So this is my favorites among those indicators. I've put the long position, short position, price range. Price range is about the most important you have to put. All right. So how do you get a price range to put in? You have to scroll down. You have to scroll down to the section where you have the price range tool. So I'm just going to scroll down. Yeah, that is under prediction and measurement. All right. So you just click on the star. You tap and hold. So let's just say I want to click on forecast. So I'll just tap and hold it. So you see it has brought out a favorite. You just click on the star. All right. Okay, that's all you do. So just press and hold the long position. Now it's telling me to remove from favorite because it's actually my favorite list. So if you want to add anyone, just press and hold. Okay, that's what I want you to see. All right, so that's it. You just want to add this price range. So once you add the price range, it's going to appear in your favorite. So you take this this mark, position it here. All right, you want to drag it down to where the price is currently. So this is where the price is currently, right? So let's just say this is the price at which we're going in. All right, so the dot is there. So you tap on that dot now and drag. Sorry, you tap on the dot. Just a moment. Yeah, so you just tap on the dots. Then the circle comes up. You drag it up. Yeah. How far do you drag it up? You want to drag it up to at least you want to see how you can target the 38.2% mark. All right. We want to see how you can target the 38.2% mark. Try not to go beyond that. So this one, 1.2%, you're going to get 1.2% if you enter this trade here. All right. Well, it's very likely, of course, that the trade is going to go high enough to give you 3%. Okay. It's very likely the trade is going to go high enough to give you 3%. So you can play around with that. Okay. You might decide to take 2% and then exit. That is how you set your take profit percentage. But it's better to always target, if you enter at 61.8, it's better to just target to get your assets just before the 38.2 mark. Now, this is 38.2. It's sitting on the 38.2 mark. So this is 38.2 mark. 50% is sitting above this mark. 61.8, the mark is just below it. All right, that's important to note. So this is not 68.2 mark, it's the 50% mark. All right. So once you have set your profit target, and always try to set it below 38.2. Yeah, always better to be safe. Just take 1%, 1.2%, get out. All right. The market can pump and pump and pump. Yes. Just take 1.2, 1.5, 3%, 5% maximum. But hey, 3% mostly, 2%, 3%. In this case, if I bring it down here, to give me about 1.2, which is fine. Just take the money and move. That's the most important thing. Now, the next thing is how to set your stop loss. All right. And I won't call it stop loss here because in RoyalQ, we don't bother about stop loss. We don't deal with stop loss. Okay. All right. So this is what we do. Now, if you look at the various marks that are right there, okay, there is the 127% mark. All right. There's a 127% mark, and there is the let me scroll down. There is this 161% mark. This 127% mark and 161, you want to try to get to them, okay? Because that is where the market might go against you, most likely up to. Yeah, the market might go against you up to those two parts. So 127 or 168. So I'd rather you prepare yourself for 168, right? So how do you calculate the percentage difference? You click on that, click here, as usual. Remember, you've added the price range. Okay, you've added the price range to your favorites. So you just click on it here. If not, you have to scroll down, add it to your favorites. Remember where I showed you. All right. You have to go down to prediction and measurements and add it to your favorites. Okay. So if I tap on it now, I will come to the current price location, which is here. I'll move this dot there. All right, then I'm going to tap there. Now I'm going to drag this down to the 161, right? Yeah. So that is 8% dip. So you can see it's giving me 8%, 8.52. So this is how the RoyalQ team, Motion International, says, okay, you're trading 5 margin calls. So this is 8.52. Let's calculate it, yeah? That is 8.52 divided by 5. Because you're doing 5 margin calls. So they're going to tell you buy 1.7, make each of the margin calls 1.7%. Remember in the previous videos, I said, forget about those left side where you have percentages. The signal will give you those percentages. So this is what they do. This is how you do it. You draw the mark, see the percentage drop, divide it by 5. So you're saying you can tolerate 8% dip here. And that's true, because most times, 80% of the time, the market will not even get up to this point. It might not even get up to this point. It might touch 100 and just push back up. So you're ready to tolerate 8% dip. But here's the thing. Remember, I always tell you in the energy team, you don't want to be caught napping. You want to keep your mind, sharp always, and be ready to tolerate 20% dip. All right. So just imagine if you need to draw this down to the next point. This is 16% dip. Yes, I could say, hey, draw it down to this point, which is the 261% point, and just divide the 16% dip, 16.6, divide it by 5. All right, so this is another option for you. 16.6 divided by 5. And that gives you 3.2%. So for every 3.2% drop, it will buy you more. So it's safer to prepare for 16% dip instead of just less than 10% dip. I'm just saying that is my own level of additional insight. But it's up to you to decide what you want to do. Do you want to drag it significantly down to tolerate as much close to 20% as possible? Or do you want to just keep it up? And so here's the consequence of your actions. If you keep it up to this point, if you keep it up here and the market pushes down to this point, so you might just have a little bit more floating loss and you will not have money to buy this dip section. It will not always happen like this, but once in a month, you might have that kind of shock movement. Once in 2-3 months, you might have that kind of shock movement, but most of the times it will hardly ever cross these two lines. So that's what you need to know about how to calculate those margin calls. And it's very important for you to know how to calculate those margin calls. Get the price difference using the price range to get a percentage gap between the various levels you think is going to drop, divide it by 5, and impute that in your margin call setup. All right. Now, how do you use so that's it. That's it for entry the trade. Now, what do you do? Anybody can do this, yeah? Anybody can do this. Anyone, anyone can do this. And remember, as the market is going deeper, the average price is getting lower and lower as RoyalQ is buying for you. So let's talk briefly about twin range filter. All right, twin range filter is a tool that can actually give you some good entry signals. So that's my bonus tool for you. All right, and you can use it in conjunction with this tool, right? But it's not no indicator is 100% accurate. So you can see the twin range filter here said long. Then it went up a little bit, came down, and it said long again here. You can see there's the long is coinciding at the same levels. So this happening twice just tells me that market is likely going to go up, and you see it actually did go up. So if you wanted to put your calculator here, you can be sure that you would have gotten at least 2-3%, yeah. You would have gotten your 2-3% very easily. So let's just imagine if you entered this is the price range. If you entered around here, yeah. I'm gonna just sorry, I'm gonna delete this one. Let me do that again. First thing, I have to drag this to the point of interest. Okay, so click on here. Let's drag it up. Let's say we want just 3%, right? Let's say we want just 3%. You can see the market really obeyed that 3%. Yeah, the market really obeyed that 3%. So this is just a bonus tool for you. As you join the various meetings of Team Energy, I have a couple of more bonus tools for you. All right. But I don't want to bore you or give you overload of indicators. That will be counterproductive. We want to keep it as simple as possible so that anyone can really see this tool. If we go back a little bit to check the results of this tool, let's see what happened here earlier. You see, the market said sell here, and it said sell here, and the market said buy here. But you can see it's a downtrend, yeah? This was a downtrend. So it's ignored the buy moves and kept selling. So you see, it said long here again. So if you enter the trade here, your margin calls will keep you in the game. All right? Your margin calls will keep you in the game. Let's say you bought here And as you bought here, the market kept going against you. Hello, you have nothing to worry about. Your margin calls will keep you in the game. So let's show you what I mean. Let's just say, let's take the price. Let's see how much deep this has gone. All right, let's see how much deep this has gone. All right, let's see. You see, it's just 7%. It went against you. Let's just see how much it went against you. This is why we say get prepared. So it's going against you by up to 12, less than 15%. Yeah, it went against you less than 15%. Sorry. Oh, okay. Apologies. I have to get the get the network set up. Just a moment. Okay, so got the network back. So that's basically it. You entered your buy signal on the twin range future. That's why I say with RoyalQ, you don't have to worry yourself. You entered with your buy signal here, and the market went against you. So what? The market will start buying the dip now. It will buy the dip, and you're always positioned and expectant to tolerate up to 20% dip. But the market got less than 15%, and decided to start going in your direction. All right, with this kind of dip that you've bought, the moment the market comes up here, even the moment it comes up here, you've sold. You sold off a profit. It doesn't have to go back to the level at which you bought it. No, because by buying the dip, you brought down the average price significantly. The average price would now be somewhere here. So by the time the market just gets up here, boom, you sold a profit and you're waiting for the next trade. So that is the trader's mindset. The market will always go against you, and no cause for alarm. Your margin settings is the soul of your business. The soul is your sustainability. So please, this is the mistake that was made in the first year of trading with RoyalQ. Make sure you have enough margin calls, gap to tolerate up to 15-20% market dip. So 20% shouldn't shock you. Expect it the moment you enter the trade. But because you're buying, the margin call settings, your floating loss will be less than, about 3%, 4%. And before you know it, you're back in the business. All right. So that's it. That's the gift of the twin range future. Okay. For those, yeah. So if you look at the twin range future again here, it told you here, hey, come on, go long. So in case you just decide to do that blindly, all right, how much would you have gotten? That means you would have entered here or here. All right, when you entered here and then you drag this up here, how much percentage would that give you? Yeah, 1.2%. You got your 2%, yeah? You got your 2% to walk away. All right. So you can incorporate this with your trading strategy with this auto Fibonacci, because you can see when the market hit here, it was coinciding with a level. And when I see this long, it means come on, go in. All right, go in and take position, take profit. All right. As you observe the market coming down, it will get to one of these levels and it will tell you long. So once the long is rhyming with one of these levels, it's likely going to be a good long signal. All right. So that's it from me. It's a bonus tool, but first concentrate on the auto fib tool and the stochastic RSI. All right, concentrate on those two, understand how to use them. This video was for the long trend. Remember, long trend, the bullish trend and the uptrend is when the 0 is up and 100 is down. In another video, I will show you how to trade when the market is kind of down. That means you see 0 down here and 100 up. But I will show you that once I get an asset that has that positioning as soon as possible. All right, thank you very much. And please like, follow, subscribe to this channel, because we're committed to helping you become professional traders. Now, you have to be ready to learn. And once you learn, the next is practice. Remember, it's like driving a car. The first time you stood behind the steering wheel, it might have it looking like a Herculean task. How can you control the steering, look at the mirrors, tune the radio at the same time? But you see, with practice, it became second nature. All right, thank you very much. See you in the next video.